This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets, the earnings, the SPY technical analysis, the VIX volatility, and a final little rant, just kind of going over how difficult of a trading day today was. And, it's that part's not super important, but if you want to listen, feel free. Anyway, that's going to be for August 6th, 2025. And with that said, let's go ahead and jump straight into the data. Let's see if we got it up. Now, today, Tuesday, August 5th, we had some decent data sets, but it wasn't anything super important. I mentioned yesterday, and probably in Sunday's video as well, that the exports and imports are important to watch just because, we can plug those into the GDP calculator. So it's important to see if those are going down or up. And obviously, in this case, they are both going down. We're seeing the exports pull down by a little over 1 billion. And we are seeing the imports pull down by 13 billion. So quite a bit. Um, you know, that should reduce the GDP overall. Now the trade balance, um, I don't really care about that too much. I do know that it came in fairly close to standards. It looks like it's pulling upward overall. Um, I know that's not some reading between the exports and imports, or else that number would be very different right now. We also had the PMI today and the ISM non-manufacturing data. So the PMI came in a little hot, uh, nothing too extreme. It was just slightly above what the market or what the forecasters were expecting. Um, it wasn't enough to cause some crazy sell-off, essentially. Now, the ISM non-manufacturing prices were up very significantly, and I did talk about that one. I did say that that would be kind of a weird um, outlier if we were to see an outlier in these numbers, that the manufacturing prices would be something we'd be looking at. Now the non-manufacturing PMI did come in lower. Excuse me. That's a bullish thing for the market. That is a bearish thing for the USD and a bearish thing for the yields. So that's why you saw some of the market reaction today, where it was essentially pulling down really early in the morning, and then it just started recovering. Well, it's mainly because of, that ISM, non-manufacturing PMI, coming in cooler. Now, at 12, we did have the Fed GDP now. It's essentially still stabilized. It's still hovering between that 2.1 to 2.5 or 2.6 range. We did have an outlier a couple prints ago that was, I believe, at 2.9. So this is pretty baseline. The 3-year note auction, that came in quite a bit differently. So you can really see that the Treasury starting to do their move to really expose the market to more of these long ends. Um, they're really starting to work on those yields. So, yeah, we should see overall the yields pulling down due to this. When you have the Treasury trying to really load out these long terms, they're really going to be slowing down on the short terms, and they're really trying to just get the yields under control. So I do expect more of that. We should see, a continuation of that throughout the pretty much the remainder of the year. Now, moving into tomorrow's data, we literally don't have anything in the morning. The first thing of data we have is at 12:45, and that's going to be Fed member Daly speaking. Now, I believe Daly was one of the members that did break away from the FOMC last week in the voting. I'm not entirely sure about that one, but if he was, it will be important to kind of listen to what he has to say. Regardless, right now, the whole Fed's kind of in a contentious area. One of the Fed presidents ended up quitting, or ended up retiring or whatever, I believe on Friday or Saturday last week. I don't know if I covered that or not, but I should have. Um, that's kind of a big deal. It's one of the first times we've seen a Fed member just up and leave their work like that. Um, so yeah, there's a lot going on in the Fed right now. It will be interesting to kind of hear literally anything that's coming from the Fed just due to that. So I am interested in seeing at least what he has to say. I'm not going to listen to the speeches, but I'll read the transcripts. Now, the 10-year note auction tomorrow at 1 p.m. That's very, very, very likely going to be pulling downward. Right now, the yield is currently at 4.3%. But I want to check something else. 1 second. Scroll down. The overnight yield is still up at a 4.2%, so it's still a little tricky. It's still a little sticky. I would be very surprised if we see the auction tomorrow give us a yield lower than the 4.2%. I feel like the market has that 4.2% really, really, really locked down right now on the 10-year auction, but we have seen a very, very large yield pull down in the 3-year auction. So, um, it's a little hard to expect what to expect out of that auction. I just kind of really just needed to see it. But that will be very important tomorrow. So if there's anything that's going to move the market, it will be something random from President Trump, or it will be very likely this 10-year note auction. Now, for earnings in the morning, we don't have anything super special. We have Uber, Shopify, Disney, and some of you play Unity, but I hope that company burns because, yeah, I've told you my story in the past. Um, yeah, I don't really care about those ones. Those ones don't do anything for me really. What is important though is that we had AMD's earnings today, and based on the after hours and based on everything else that I've been seeing, it looks like AMD is struggling with their earnings. They are currently down 6%. Now, is it hitting the entire market as a whole? I don't really think so. We're actually seeing the QQQ down right now in the overnight. We're seeing SPY down in the overnight, but not very much. They're only down by um, negative 0.20% right now, so not very huge sell-offs occurring with that. But that was kind of the tech savior for the week. If there was going to be any earnings that were going to save the market, it was truly going to be AMD. Um, and obviously AMD did not perform. So now there's really no strong tech to fall on to the rest of the week. Now, with that said, moving into tomorrow's earnings, we have IonQ. I won't be playing Quantum for a while. I will be long-term shorting it eventually, but not yet. I know many play Elf. You know, I I don't really play Elf, but DraftKings is always fun. The premiums on the options do pretty good. So if you want to play something cheap for an earnings, DraftKings is pretty good for that. Now, I am excited for Thursday's earnings because of Sweet Green. I know I gotta have my hipster salad company do good. Um, but other than that, there's really not a whole lot of important earnings this week. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into tonight's technical analysis, as always, let's go ahead and turn on the daily time frame. Let's open up our moving averages and our Bollinger Bands. And let's discuss what happened today. So I will kind of preface this video. Today was probably one of the most difficult trading days I think I've seen, just in terms of overall signals, overall lack of signals, um, misrepresented signals. They were working very, very, very hard to sway people from seeing what's going on. And if I did see it correctly, I'm actually very proud of that because this was extremely, extremely intense day. Um, I literally had to take a nap for I think what 3 or 4 hours after the trading session today, just because it was that much. Yeah, we'll go over it. I'll finish that rant later. But today was an extremely, extremely, extremely key day, and it worked out very well. So before we go over that, let's just quickly go over the moving averages and everything as always. So the market closed at 627.97, and the 5 mile is at 629.48. I was going to say that backwards. That means that the 5 mile will be pulling down tomorrow. That means that the 5 mile very, very likely is going to be around maybe the 628.80 range, potentially even the very low 629 range. It could be right where that 20 mile is, and the 20 mile. I'm not gonna discuss the 10 mile right now. Yeah, I'll discuss the 10 mile in another video. Not this time. I'm not too worried about it right this second. I'm more worried about this 20 mile level. So the 20 mile is at 629.16. So tomorrow's open, it should pull down very slightly. It should be basically right smack on top of the 629, or just very, very slightly above it. Okay. That means that while we are seeing that bearish momentum downward, and potentially we are going to see the 5 mile crossing the 20 mile tomorrow, which for bears, that is the shorting signal. Um, and I can just do some historical digging really quick to show you why. Whenever you get the 5 mile crossing the 20 mile, that's when you short, because generally that's a trend change. That's saying that the buying is no longer, let me rephrase that. The 5-day buying is no longer sustaining the 20 days buying level. Okay, so that means that our buying is so weak that it can't even keep up with the month. Um, so what that tells a short is that that's trend change. Okay, that's generally when you get major sell-offs. Even these little tiny sell-offs from here, this would have been a move from the, okay, so the 595 down to the 571. So that's a whole 20-point move right there. See another cross to the downside. Here's another downward cross from the 546 down to the 533. Now that one's not super, super impactful, but that was still a full $15 or 15-point move. Downward cross right here. So from the 547.46 all the way down to the 504. Okay, so that's a almost essentially a 50-point move right there. Where's the downward cross? This was a down, oh, that was an upward cross. This is the downward cross right here. Okay, so the first level is at 510, and they got all the way to 486. Okay, so if you can, kind of see that generally it's a trend change when that happens. It's usually not some short-term pop, head downward and pop back up type thing. So if we see continuation of this, which I do believe we will, then that means that we will see the 5 mile moving below the 20 mile range. And that, again, that is a super strong bear signal that we are going to get some downside. And for the bears, we've been looking for that for quite a long time. Um, Now let's just kind of quickly go over the Bollingers here because we are, essentially right between them. So it is important to be aware of them. Now, our Bollingers are starting to pull in on each other, and that's just because we're really just consolidated right between them. It's the market saying, okay, it's time for a move. It's time to either expand these or pull them down, pull them up. We need to move. It's time to go. Um, so with that said, uh, with us basically right on top of the 20 mall, we have a lot of room to either build bullish again or to truly, truly, truly break down. So let's go over the bullish side really quick and then we'll go over the bearish side because, I know a lot of these videos have been very bearish lately, but we are holding a very bearish stance right now towards the market, for the short term anyway. So the bullish stance is that, okay, we have fully tested the 5 mall. Yes, we closed under the 5 mall today. However, that can be used as a support to turn this, and hopefully there's not a whole lot of drawings here. There probably will be. Gosh, okay, we're gonna hide those. I have to bring those out for the bear explanation. But you're still looking for this to turn into a cup. Okay, and that's all the structure you need to continue looking for as a bull, is that you're looking for this cup to fill. Um, we have tested the lower bounds of the 5 mile twice in 2 days. We have tested the upper bounds of the 5 mile once. We've tested the actual 5 mile level once. So, if the market does find a catalyst to find some buying, you do have the support to go all the way up to the upper Bollinger again. Okay. And with that range being at the 639, that's a 12-point move from here. So just be aware, if we are going to see bullishness, whether you're a bull or a bear, um, there's a full 12 to 15-point move above us right now, okay? If you're bearish, like I am, and many of us are, then we need to be aware of the bottom Bollinger. Now, as we start traveling towards it, it's going to heavily expand. Um, the bottom Bollinger right now says we have about almost the exact same range, basically about a $12 range right now. But once we start pulling down, that's going to open very close to probably around $17 to $20 on the downside just to reach the bottom Bollinger. So I'm not expecting that to really happen yet. What I do expect to happen is more of this testing the 5 mile, rejecting, testing the 5 mile, rejecting, and continuing to see that used as, and I always describe it as a magnet, but either it's going to be used to kind of pull the price and attract the price towards it, or it's going to be used to push the price away from it. And sorry if you can hear my daughter screaming in the background. Um, my wife's trying to feed her right now, but what we saw today was a perfect example of that. We saw that the 5 mile was pushed up against, and I'm gonna go over this in the 30-minute time frame. And let's turn off the Bollinger Band. Now, the 20, hold on. The 5 mile was basically right in this 630 range, in the really low 630 range, high 629 range, okay? Now, essentially what happened was we pushed down in the morning and we were, little below the bottom bounds, and we went and started trading within the bottom bounds of the 5 mile itself. We then pushed up above it, and at that range, I saw no call gamma. I saw really no more buying continuing up here. I saw a lot of downside gamma picking up. So that really told me that this wasn't going to complete. This wasn't going to finish out to the 633, and that we were really going to break down and continue downward towards that earlier morning trend. And that's what happened. We hit that 5 mile range and we broke down and we held within the bottom bounds of the 5 mile for the rest of the session. And as you can see, it pushed us away from it. And that's kind of what we're looking for. And that's what we're going to be looking for. And it's going to be kind of challenging until we actually get people to start pressing the sell button very, you know, with some as I always say, with some gumption, we need people to actually press the button, um, to sell. And that's what this move is for. Um, but with the 5 mile above us, it gives bears a lot of room. It makes it so that, say, the 5 mile is, what did I say it was going to be at the 628.80 range tomorrow? Um, so assuming that's the case, then you kind of want to see the market pulling right into the lower bounds of the 5 mile and continue selling calls into that range as we push downward. That is how dealers build the downside. Because essentially there's many, many, many different tranches of funds just mechanically set up to buy and sell, whether we go up or down. Okay. And they do that to automatically balance their books, whatever it is, right? When we start selling down and we actually start getting some of the sell down pressure, a lot of these tranches that are forced into a selling position will be forced to sell. And that's kind of what we're looking for. We're looking for the dealers to not only hedge that downside and start selling equities into it, to, prepare for that downside, but we want to see the funds buying into that downside too. And by buying into the downside, I mean they're selling shares into the downside to secure profit at those levels. And it's a totally automatic thing. It's not anything people really, you know, press the button themselves, but we do need to get the machines to press that button. And we're really struggling. We're having some struggles with that. Um, this entire selling process really hasn't had people pressing the sell button a whole lot yet, besides, just that single day. Um, it's been very difficult, but we haven't been seeing buying pressure either. So on the opposite end of that, it's equally difficult. Um, Now I did want to go over this in the 4 hour time frame because we had our drawing from yesterday, and I know it looks like a bunch of squiggly lines right now, but I'm going to delete that. I don't know where the other corner went. But we were looking for kind of this range to be traded within. I could actually move this. There we go. We were looking for that range to be traded in to start creating this right shoulder because we have our left shoulder, as shown by the box, right? These boxes are showing that that's liquidity being basically taken in that range and trapped in that range. So we have our left shoulder, the head, and now we need to build the right shoulder. And let me just draw the bracket again on this side because it disappeared somewhere. Let's make it purple. Okay, so again, we're looking for more price action in here. Whether it's going to continuously trade in here and continuously hitting this 630 range and pushing back down towards the 620, I'm not entirely sure. But kind of like how for this side was, you see how this moves upward and opens out. We're kind of expecting the opposite of that. I don't know why that line didn't turn out into a line. Probably because I clicked the wrong tool. But we're looking for the opposite to start to occur here. We're looking for this to continue to break down and to break this blue consolidation line, build that right shoulder, and finally give us the liquidity for this major head and shoulders to start taking some of these larger gaps downward. And again, some of these gaps down look like this. That is a horrible drawing, so we're going to redo it. Here's one of the gaps, though, at that 5, whatever. And then there's a gap right above it as well that I will draw. But essentially, this is what we're looking for the market to start doing, is to build enough liquidity to push into these gaps and to take these gaps out. Okay, and I'm just going to kind of ladder these up like a staircase so that everybody knows that's kind of what we're looking for. We're looking for the continuation of breaking down. Okay, now bulls, if you're wanting upside, The next real range to look at that is basically this bottom consolidation channel. And that is at the, hold on if I could pull my cursor to it. Essentially right at the, sorry, it's not allowing 619.92-ish range. So around that 620 range, whether you're bullish or bearish, that's a really good range to buy calls because just historically from this trend and from this consolidation channel, we see that calls have taken us all the way from the bottom to the top. Okay, and that's a 30-point move right there. So whether you do it for a hedge, whether you do it as your main bet, I don't really care. Just make sure you have some sort of calls if we start getting down to this line. We do have a ton of downside built below us. I've been trying to identify this for quite a while now. I do see that we are building that bearish structure at the top of the handle like we wanted. I'm going to delete this head and shoulders just because it takes up just a little bit too much drawing. But I do want to keep the boxes because I feel like they're very key. So that's kind of what we're looking for. We are looking for our bear structure to finish out, and we're looking for this handle to really start heading downward and building the liquidity we need to eventually push up to, the 670s, 700 range, wherever we're going to go. But this is overall bullish in the sense that for the larger daily structure, we have been expecting this cup and handle to form. We've been expecting this handle to build bullet bearish structure to head downward for a very long time now. It's starting to do that. We're just on the cusp of seeing the signals telling us that that's happening. Now we just need to allow it to happen, and we need to see where the bottom of this handle goes. Okay, now again, we're not entirely out of this zone yet. Until we break out of this consolidation channel here, this can still turn bullish, but we've been seeing a lot of signals telling us that, hey, the market's really wanting to start selling off. We are starting to see a ton of structure telling us the exact same thing. And I just want to highlight this large inverse cup we got going here. And I know it's hard to see, or it's hard to see with all these colors going on and drawings going on, but this yellow inverse cup right here is kind of what we're looking to fill out right now. We potentially have the top of the handle built. Um, that may not be the case. It may still, try to head up a little bit and then down. Um, we'll see. But so far, everything's aligned how we want it to be. Um, and we're gonna go from that. So I do think we are going to see a selling day tomorrow because of that. I do think that this is how we are going to start breaking down and seeing our sell-off really, come into fruition. So yeah, that's that. Um, I do want to go over the VIX because that is very important. All right, and here is the VIX. And today it gave us very, very, very conflicting signals. As you can see, it pulled up very massively in the overnight. And then in the morning, it just really started pulling down, 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 and then picked up with a very huge candle and then pulled down. So for us, and this is kind of why I was saying today was a very difficult day, is that this looks like a bearish structure. This looks like a bearish structure. This is head and shoulders. It doesn't look like it exactly, but it is. We have the liquidity there. Or you could say that that's the shoulder. I don't really care how you do it. Again, this can also be seen as a head and shoulders, which again, head and shoulders for the VIX is bullish for the SPY, bearish for VIX. Now, there is that. However, we were expecting some downside. Okay, and from this downside, we do have a lot of upward potential now. We can form a very large cup from this range all the way back up to that 22 area. And if we start getting selling on the SPY like I think we're going to, um, we should, really be looking for that to fill out quite a bit. Now I just want to look at UVIX really quick, or this is UVIXy. Um, that's great. Kind of exactly what we want to see. We want to see this cup into a cup and handle. We don't want this head and shoulders here. That's gross. We're gonna delete it. Um, so yeah, we do want to see that cup continuing upward. We do want to see this range taken at the 20 again. It looks a lot farther than what it is, but it's not too far away. I do see good structure in here. Today was actually a pretty nice day for UVIX. It did pull up quite a bit, but we did have it pull back down. This was, again, another reason why I'm saying there's a lot of conflicting signals in here. It was a very difficult trading day because of that. Um, yeah, UVIXy. That cup did not break, and it does look like we are seeing structure to head upward in that. As you can see, there is a small cup building a handle, so very likely that will be a cup right there. That will be the cup handle to build the further cup. Okay, that looks good. So VIX is starting to look bullish. Okay, we just need to be careful, obviously, because the VIX is still very controlled. It's still being pressed on very heavily. We saw that today. Um, yeah, let's just go into my other little rant then. So today was super difficult, and that's because nothing was giving us clear signals. And let's just go over the HIG, and this is the high yield corporate debt. Find the symbol. I'm a blind man sometimes. There we go. All right, so for HIG today, and this is going to be a little harder to see, so let's put it on the 5-minute chart. Um, this is what our morning looked like. We had this very large cup forming in here, and then it looked like we were starting to form a handle. So that didn't look good at all. It looked like we were actually going to have a major buy upward. Okay, and if you know the HIG, you know that upward in this means it has a correlation with buying in tech and the SPY. If we see selling in this, then that has a very deep correlation with, um, selling within the SPY. Now, this looked super bullish for most of the day. When I was going over the gamma on it, and that means, you know, kind of where the interest is within the actual options, there was a ton of puts stacked at the 850 range. So that's up here. So you have massive amount of puts stacked up there, and we're going to put that in red. And we had no calls. There was absolutely no calls on the day. The day was essentially entirely puts. Um, so it was a very conflicting day. It's like we had bullish structure building, but we had nothing but puts being written. And then on the VIX, we had a very similar but inverse situation where it was a very quote unquote bearish day for the VIX. It looked like we had a ton of bearish structure building out. Um, our gamma within the VIX was showing a mix between bullish and bearish positions. So we had tons of puts being written within the VIX and everything to push it downward. And it wasn't actually until closer to the end of the day that the gamma on the VIX was starting to actually show people were buying calls and preparing for it. So again, that's another really hard signal. Um, what else did we have going on today? We had TLT showing strength as a TLT call. So we had TLT showing strength for a majority of the day, which again that supports the thesis that dealers are trying to buy treasuries and move out of tech positions. But then all of a sudden we have this crash out for the rest of the day. Okay. Um, so another very misleading signal into our day that was, potentially either a major bull trap or a major bear trap, right? We had our health sector doing really well. This was actually one of the first days where it actually just held ground. Um, that's a very good sign for money moving into the health sector. We saw UNH and many others just absolutely pumping today. Um, Again, that's telling me at least that tech money is moving into other sectors. Uh, what else? Something else I wanted to show, but I just don't remember at the moment. And let's go over back to the SPY, I guess. And then the SPY ADL, that's also what I was wanting to show. It doesn't show it very well on this 30-minute graph, but it looked bullish for the first part of the day, and then it just was tapering off, and just fell off. So the ADL was also not holding its strength as well. So uh, very, very, very difficult bull trap. It looked very likely that this was going to turn into some massive cup and handle, that we were going to get the 632 close, and then that was just going to leg up straight into that 640 range, close out that cup, and just absolutely toast all bears. That did not happen though. That was not the case. Today's trading session did not give us that handle. As you can see, that potential cup right there that was forming, and we had a lot of that weight held in the overnight, really dumped off in the morning, and potentially people are looking at this for a very large cup and handle. They're going to look at this for an inverse head and shoulders. Or if you hear my cat, she's yelling at me because I'm taking a long time. And they are going to look for that to fill right back up to the 632. I don't think that's going to happen just based off of, again, today's movement. We rejected the 5 mile. Um, that is a bearish thing to do. And as we continue pushing down and continue pushing the 5 mile downward, it's going to continue pushing us down further, which will trigger people to start selling and trigger dealers to start selling into that to, hedge against it. So, okay, that's the video. I'm done. Today was hard. Um, let's have a great day tomorrow, everybody. Keep your heads on tight. I know many of the bears were freaking out today. I was a little bit too. I won't lie. But everything's looking really good. Everything's looking like we are getting ready to taper out and have our sell off. So, just hold on strong. We'll get through this one. Anyway, have a great day. I will talk to you in tomorrow's video. And yeah, that's my spiel. Have a great night, everybody.